My friend and colleague Jim Rosenberg from Accidental likes to say that when people are young, when they're kids, and someone asks them, what do you want to do? What do you want to have when you grow up? They say, I'd like to have a good education, I'd like to have a good life, I'd like to have a house, I'd like to have a car, etc. Nobody ever says, I'd like to have a bank account. Nobody ever says, I'd like to have a mobile money account, right? The point being, obviously, as we've just heard, that lifestyle, the life you aspire to, financial inclusion is a function leading to that. And client centricity is something that enables greater financial inclusion. So this focus on client centricity, we've been doing it for 4 years now. This is the 5th, as we've said, as you've heard. Every year before SoFI, we send out to all the people who are invited a little survey to ask you your views on the state of client centricity, how you think your particular organization is in terms of client centricity, whether you are a client-centric organization. And we also ask you what you think of the sector in general. Do you think others are client-centric? So we tabulate those results. We're going to show you the results now, talk to you about the results. And what I need from you is your participation. So I'm going to invite onto the stage 2 people who are going to walk through the results of the survey that I hope most of you have filled up, if not all of you have filled out. And they will be looking for your reaction to what those results are, whether that rings true to you, whether you think there's something off, whether you think it's an accurate statement of where we are on client centricity. So please welcome Lindsay Wallace, who is the Director of Strategy and Learning at the Foundation, and also Mikael, who is the Director of our Rural and Agricultural Finance Learning Lab. Lindsay and Mikael will walk you through those results, okay? Come on up.
Good afternoon, everyone. We recognize we're the last panel before lunch, so we're hoping to interact a little bit with you. Thank you, Roger, for that nice introduction, and welcome, Mikael. What we want to do today is to walk through some of the findings on our client centricity survey and to just reflect a little bit, and we want to hear from you as well. How have we been doing so far? We're going to start with the high-level messages. So by way of background, as has been mentioned, this is our 5th symposium. We've been asking you about client centricity for 3 years. It's a way of us trying to be a bit client-centric and making sure that we're actually listening to your needs, we're supporting your learning journeys as we start to develop and think about how we want to design the symposium and what you want to learn from us. And it's also our way of doing a little bit of a pulse check on where the industry is. So just to start with a few of our key findings, overall, compared to previous years, you've gone a lot further on your journey. We asked a number of questions, and we're going to dive into the weeds of the survey in a little bit, but just from a high level, you feel as though you're on a positive journey. But we really want to probe a bit. Are we kind of talking to each other? Are we all in a bubble? We're hoping to hear from some of the naysayers as well. One of the key data points that has come out as well is that there's been a huge increase in the number of partnerships. Our current statistic is that at least 78% of you who responded to this survey before the event indicated that you were in partnerships. And we're seeing that more and more and highlighted throughout all of the discussions that we've been having over the next few days. And we also asked you about innovation. And so some of the biggest innovations, not surprisingly, all relate to technology, digital channels. So you called out mobile banking, digital financial services, and agency banking as the key innovations. And that was 90% of the responses related to these three areas. But I'm going to hand it over to Mikael to talk a little bit about some of the client information, and we're going to go back and forth. One last point, sorry, just to say that the gap between customer needs, organizations, and products and services is still one of the biggest challenges. It was touched on a little bit today. We're going to keep touching on it again.
Thanks, Lindsay. So if we look at the first client question that we asked all of you, as an industry, do you believe we have a better understanding of our clients, their aspirations, and their behaviors compared to 5 years ago? Now, 60% of you said that we do have a better understanding of our clients, but we haven't cracked the nut yet and still a long way to go. And actually, there's a small group of you that said that we we still haven't moved or changed from where we were 5 years ago. So I think later in this session, we're going to ask some of those people to stand up and say something about it.
You know, Anne did ask us, are we doing enough? And that's an important question. So we also asked whether or not we are providing clients with better choices, you know, touching on Daryl's point about how finance is so integrated into people's lives. Are we starting to solve some of those challenges? 26% of you said yes. 68% of you said somewhat. But 6% of you still don't think that we're doing enough. We're not there. Now, 2 years ago, 12% of you felt that way. So we are getting better. But what we want to do now is to hear from some of you who think that there's more that we could do, and just to probe a little bit as to what some of the challenges are, where we're missing the mark, what our issues are. So who wants to fess up to being part of the 6% or more curious about the client journey?
Well, I think so many things, right? Of course, we want to move forward and be more client-centric. But it has been my experience that we've had a really hard time even defining what is client centricity until this year. So how can we check if we're more client-centric if we don't know what client centricity is? Secondly, when I talk to people, I think it's been really difficult to assess who is actually client-centric, because we can all self-profess that we are client-centric. But how do we actually know somebody from the outside would also consider us client-centric? Thirdly, what I think about is client centricity maybe a spectrum rather than black and white issue. So maybe you can be a little client-centric or a little more client-centric or very client-centric, rather than are you client-centric or not. So this is how I think about the issue. And I think the other thing that I don't hear talked about enough is if this was easy, everybody would be doing it. Mm-hmm. And it wouldn't be hard. And, you know, like there are 10,000 microfinance institutions around the world, they would all be doing it. So there's something that's hard. And I don't hear enough of us talking about what is hard, because I think the way we learn is when we talk about, honestly, what is really difficult.
Thank you. That's a very good point. I think part of what we do want to do at SoFI is try to surface those things that are hard and to share and to learn. I absolutely agree. If it was easy, we'd all be doing it. Anybody else want to reflect on some of the challenges? I think that's Sequinder.
Just building on the point Natasha was making, we know, for example, from the State of the Sector report from GSMA, that we have less than 1-4%, 25% of the clients only active. Yeah. And we are adding millions of clients. This is like adding water to leaking tanks. And if you have to acquire 4 clients to have 1 active client, how much cost we are incurring? Yeah. And how will we recover that cost on the unlucky customers who are still with us? So I think John gave us a good framework in the previous session, and I fully acknowledge and applaud that, which is attract, retain, and upgrade. So let's look at how many we have attracted, how many we have retained, and how many we have upgraded. In fact, many years ago, I wrote something called Moving from Customer Acquisition to Customer Delight for WSPI. There was a paper there, and I think we need to look at that. Yeah. Customer acquisition, KYC, not to meet regulatory needs, but know your customer in terms of what's the life journey they're going through, and how can we make it back to that. I think we got some excellent examples in the previous session.
Thank you. We definitely did. Customer delight that's such a great way of framing what we're trying to do here. And just to say as well, you know, and to give another plug to the CGAP guidebook that they've put together, they really are starting to think about definitions. But I agree with you, Natasha, as well. It is challenging.
What about hearing an example of a success story, something that has worked, something that you've implemented that has led to you becoming more customer-centric? Does anybody have any examples they want to share with us?
Good afternoon. I'm Lerato Lohoko from Yellowwoods in South Africa. just a reflection on a process that yielded some success is how you bring along everyone in a process. So I think we've been really good in getting what I call front office people developing customer empathy, but it's always a challenge when the actuaries have to do what they have to do. So what we did recently was to actually arrange an immersion for everyone who's involved in developing a product, including the actuaries, compliance, and all the functions that often create challenges. So I think if we can think about customer empathy and get everyone who's relevant over the line and not just the product development teams.
Excellent. Customer empathy, building on customer delight. Was that another? Oh, go ahead.
Hi, my name is Sabine Mensah, and working for the Mobile Money for the Poor program with UNCDF. What we've done in Benin, looking at the motor taxi drivers called Zemigen, is work with a human-centric design firm and do an immersion with the Zemigen, better understand their lives, what they do every day, what is important, what matters, so we can work with MTN, mobile money operator, to craft the solution that's really going to match their need for payments, for savings group. And this is the work that we're doing in Benin. And what came out really was that we're not selling a payment solution. We are selling a solution for the Zemigens to be safer in collecting their money, in servicing their client, and enabling them to save, to save for their future growth and to save for protection against shock. So it's all about living in the shoes of the consumer that you want to serve before crafting that solution that meets their needs.
Thank you, Sabine. Excellent example. Just see. Our next set of questions related to the institution.
Thanks. Yeah. So moving on to the institution from the client, one of the questions we asked all of you is, what are some of the key efforts your organization has made towards becoming client-centric? And so the top 3 responses we got were improved customer day-to-day management, feedback loops, and overall customer service, invested in new technologies, and expanded product design. Some of the other responses that we got, not in the top 3, were increased personnel focus on client centricity, smart certification, providing tools to facilitate market regulator client focus, and raising awareness among member banks of the importance of client centricity. So I want to open up to the audience again. I want to hear from you. What are the things that you have done that have led you to become more client-centric? Have they succeeded, or have they failed, or have they not worked as well as you expected them to hope? As you expected them to work? Do we have any volunteers?
Actually, for us as Finca DRC or Finca in general in Africa, what has helped us to really satisfy customers, it has been agent banking. With a full branch, it was difficult to serve customers in rural areas. So for over a year now, we've been opening up agent banking in rural area where there is no branch, there is no bank, and it has been a very good experience. Even the network itself, it is so challenging to have a good network at a certain timing, but it was a surprise to see customers in the village opening up savings accounts, not even loans, but savings accounts. And as they were opening, we're like, you can open, then be putting money on daily basis up to when you will reach a certain level. But we were surprised to see someone coming with $300 to put in the account. This is deep in a village. Mm-hmm. And most of the customers there, the average loan size, if you take the base of the pyramid in city center, the average is like something like $10. But in that village, the average has gone to $30. So sometimes we are just trying to be comfortable, looking at sustainability and leaving aside the base of the pyramids. But if we go deep where they are, we can get the best out of those customers.
Excellent example. Going deep, going rural. how to get there. And Finca's had a great success story in DRC in growing their customer base. Any other examples people want to share? All right.
Maybe I can actually call out one of our partners, Lisa from Mercy Corps. I know that you've been working a lot with your partners to use human-centered design to design client-centric products. Maybe you can just tell us a bit about that experience. What has worked? What have been some of the challenges?
Thanks. So our program actually, we've been very fortunate to be able to use Mastercard resources to help organizations use human-centered design and rapid prototyping, testing, and user experience testing. And one of the big ones that we worked on that finally kind of came through to fruition this year was with Safaricom on how you could leverage M-Pesa to really help farmers. So what do you need to bundle? As, you know, to Daryl's point, you know, M-Pesa alone, they recognized wasn't really transformational for smallholders. So, you know, they had a hypothesis. They have to have credit. It has to be about credit. We said, listen, why don't we go out and listen to them? Because none of us really know exactly what they want. And we were very surprised to hear, I think every time we've done human-centered design, we've always been really surprised by what comes back. But what they said was, we don't want more debt. You know, what we want are great inputs at a discount. That's what we want. And we want information. And so we took the product to market about 6 months ago. We really worried about doing this, completely client-centered product. But they reached 90,000 farmers in the first month. Now they're up to 180,000. And you know, we listened to the roadmap of what farmers wanted, and we'll be layering in. But sometimes human-centered design can really, really surprise you. And on the other side, doing user experience testing, after we designed it and we came back and did user experience testing with farmers, then we started realizing that some farmers could learn on SMS and lots of farmers couldn't. So, you know, keeping on going in and looking at user experience is helping to kind of refine the product and expand it, you know, as it moves forward.
Thanks. That's really interesting.
Great. Listening to customers, human-centered design, customer empathy. Oh, there's another example.
We got one here afterwards.
Oh, I'm sorry. 1, 2.
I'm Rosa Wong from Opportunity International. I want to talk about an exercise we did here in Ghana just very recently with our partner OISL on the ground. And that was to conduct focus groups among the women clients, particularly, who were not taking up the service. So we'd introduced Opportunity Mobile, really wanting to focus on what the concerns were and really listening to some of the challenges and understanding that. I'll give one example just to give an indication of how deep some of this goes and how we might inadvertently design something that is not client-centric. And that was the training for the PIN. And we're telling people this is your secret PIN code, this is your personal identification number, this is important. So many of the women thought, oh no, I can't use this because if I forget my PIN, all my money will be gone. And so instead of doing that, we're now saying, okay, your PIN can be reset. That there are features around it. But something as simple as this, even in the context of that, means that the women were very afraid. And I think this reaches into the area that we are getting better at understanding, that many of the things have to do with fear, with risk aversion, and with things such as stigma. Many of the women said they were afraid to ask for help from the loan officer. You know, he's so busy, I can't ask a question. And I think this is why I'm in full agreement with the previous comment. This is actually quite hard. And as we peel back the onion, we're finding out, you know, it's even harder underneath. So I don't think I answered the survey in saying that we're further away, but I think we do need to recognize that there are many, many layers.
Yeah. And the more we know, the more we realize we don't know as we go further. Thank you, Rosa. That was a great example.
I have a question down here.
Down here, Richard?
So, Richard Lefley from Microinsure. We, about a year ago, so coming out of, I think it was Turin 2 or 3 years ago, we were starting to do some work with CGAP on bringing in external consultants to help us look at human-centered design. One of the things that we learned from that process was we were working with a lot of mobile phone companies to help us reach out to the clients that we were serving. And we started to track where in the process of signing up for insurance, people stopped the process. So we were looking at the basic questions that we were asking. So we were asking, what's your name, what's your age, and who's your dependent? So who's your next of kin? If something bad happens to you, who should we give the money to? And we were losing something like 80% of potential clients during that sign-up process. So by using the USSD menu, we were able to find out where in the process people stopped. So which was the questions that were causing them to not complete the process and not go through this very simple 3 questions that they needed to complete in order to get insurance. And what we learned was that about 20% of people gave up the process when we asked them their name, 30% when we asked them their age, and we were losing so many clients in the process. So we went back to the insurance companies, we went back to the regulators, and we asked the question, which was, what would happen if we could just insure people by just simply using their mobile phone number? So if we didn't ask any of these questions, would that be okay? And there was a huge amount of resistance to doing it. The first product we launched, which allowed us just to onboard people using their mobile phone number, we signed up 20 million clients in the 150 days, in the first 150 days. So there's this kind of sense that insurance is a really hard sell. It really is. But if you make the customer journey simple enough, you can overcome some of those barriers.
Thank you. That's a great example. Really understanding the customer journey, making it simple. Thank you. I'm going to move us on. We asked a question about what has been the biggest challenge for your organization in terms of implementing client centricity. And it's interesting, the discussions this morning, I think, gave us some good insights. So certainly, almost 25% of you said internal challenges, and Denis talked about the critical importance of internal buy-in. 22% said it was much more of an external issue. It has to do with policy and regulation. But the biggest number and the biggest issue for most of you is the business case. Does this actually make sense for us as an organization? And what's interesting is when we asked this question 2 years ago, that number was 16%. So either we're further along in our journey and we are starting to try to understand the challenges of at least measuring this from a financial perspective, or maybe that reflects internal resistance. But what I'm going to do, since everyone's been sitting for a little while, I'm going to ask you all anybody that has an issue related to the business case, or if you think that the business case is indeed the biggest challenge that we need to overcome, and maybe just share any reflections to maybe stand up. And who might be willing to share their comments on this? Because this is a big pain point, and we see this, just to say as well, at the foundation, as many of you know, because you're our partners, we've been working on this issue across a number of different organizations. So I know that the Learning Lab, the RAF Learning Lab, is certainly looking at this from the smallholder finance perspective. We discussed this yesterday in a side event on rolling out alternative delivery channels. We've done a lot of modeling. We've been working with the mix. We're trying to understand how do we actually start cracking this nut, as Gerard said. But I see, it can't just be 50%
about 47% of you should stand up.
Said that this was an issue, and it's not just poor Till over there. There we are, Lisa, there we go. Go ahead, Till.
Sure, I can share a few examples. So we work with providers. We also work with users of digital financial services, and we also work with governments who want to digitize. With all of them, we face a challenge is that they just don't see the business case. They're not convinced. And so we've had to dig deeper. And what I mean by that is, first, we try to keep the client in mind. And the truth is, for a lot of digitization projects, there's not a good business case for the customer. It's really not solving any problem for them. Their life is perfectly fine in cash. And there's nothing about what we're offering in and of itself that makes their life better. So that was lesson number one. So now when we go in, we don't just think of digitizing a payment. We think of what else does the customer need to do with that payment that would actually make it worthwhile. And if it's not, then we shouldn't punish the customer and make them take digital payments. But then the other one is we work upstream. And we've discovered, and with CGAP, we did some research recently looking at this and just seeing there's not a great business case for customers to receive payments. And we discovered that what makes a business case are a couple things. If the payment's at a distance, if they get some kind of discount as a result of getting the payment digitally, or if they're high value and there's a security risk in them carrying around cash. So trying to focus on those three things, and those is where we can start with digitization, is how do we address those three things where we know that clients do see value in digitization. Another thing we've tried is working our way up the food chain. So the fact is, if you tell clients you have to take a digital payment, which isn't necessarily in their best interest, and then you tell them they have to pay for it. It makes no sense. We were discussing yesterday, we shouldn't be charging clients, low-income clients, for this. We should be bribing them. We should be paying them. So the other thing we've been doing for the business case is trying to work our way up the food chain and see who is benefiting from this, and how do we get them, how do we solve their problem so they're willing to subsidize all the way down. And so it's leading us to some interesting places. For instance, we're working with a tea plantation in Uganda, and what they really want is a customer loyalty program. And with that customer loyalty program, they need data, and payment data would help with that. So we're working our way up to help design a customer loyalty program because that's what they want. They want buyers to sell to them. So I think we just have to start thinking creatively about where is the business case, because it may not be where you think it is, but there is one there. I think we all know that there's one there. So just take a step back. Don't look too close to the magnifying glass, because those numbers will never work in most cases, because one, the models don't fit what we're trying to do, and two, the models can't take into consideration everything else that might come out of it. So yeah, take a step back.
Could I ask Mary Pat to say a few words from OI? I'd be interested in hearing her response on this as well.
Yeah, well, first of all, ditto. I agree with everything you just said. I think I'm one of the few people that's willing to stand up in conferences like this and say I'm not necessarily for 100% financial inclusion, exactly because of this demand issue. And we've been paying a lot of attention in our digital finance strategy development to the client experience. And Rosa often talks about these gateway experiences, that when a person gets a phone, what does that open up for them? And then they start to take advantage of different things, and they develop a demand for the next step. And they might start to use mobile money, which is another kind of gateway experience. But we're trying to understand things more from the client perspective. And one thing I don't think I've heard people talk about is large surveys. So we did a large gender analysis of our ag finance in Mozambique and Ghana. And really what we were trying to get at is, you know, the business case for serving women. And I think the biggest lesson there was about market segmentation, and that, you know, women are not one market, and that other drivers, their business status, their sector, their education level of customers comes first in terms of segmentation. And then once you have those kind of viable customer groups, then you can start to disaggregate by gender and understand women's experience. But that when you start to talk to banks about the experience of women and financial inclusion, and 80% are illiterate, and this many don't make that much money, the business case doesn't resonate. But you know, when we look at the ag sector in Ghana, we see that a large portion of SMEs that are involved in trading and processing and wholesaling are women-owned SMEs. And then all of a sudden, we've got a much more characteristic market segment to look at and examine in more detail. So that kind of segmentation is starting to feed into making the business case from the financial institution point of view. And then we're working with BFA just to get the data about which digital channels and which products and services are actually earning a profit for the financial institution, and building that into the analysis, because we really don't often have the tools to know what's profitable and what isn't for the banks.
I am working in a different sector. It's one of the boom sectors here in Ghana, and it's the construction sector. And the challenge we are having is with encouraging the youth between the ages of 17 to 24 to open accounts. We're looking at getting them to open accounts that are not just transactional. But then, so thanks to Mastercard Foundation, that's one of our biggest, that's actually our biggest partner. But the issue with the business case is this: the bank we're dealing with also has targets, you know, profit targets to make in a year. And here are this group of young people who aren't the regular formal sector young people. And they are not actually earning the kind of income that the banks will find attractive. But yet we have the large numbers. But still, the issue is this. The regulatory environment that we are in prevents them from opening accounts because you must have proof of residence, you must have bills that utility bills that you pay. Now, how do we deal with attitude and then use that to align with a business case that the bank has its targets to meet at the end of a year? And the attitude of the young people is one that, look, I don't think I want to open an account. I don't want to go through that kind of headache of getting into a bank and being asked to produce all these documents that I don't have. We might think that technology is making a case, but for us, these young people earn less than $2. And so how can that person afford a phone? And most of them will tell you they have a cell phone, but it's just the SIM card. Yeah. And they use that only when they have some money to top up that SIM card to get access to make a call. So now how do we make that balance, you know, and ensure that the business also is profitable and the young people who are the clients, the major clients that we're looking at, are the focus of these business I would say, products that are being developed. And that's our experience we're having. So we've had to work with telcos to see how we can use the mobile wallets to work alongside and things like that. But it's still a challenge for us.
Absolutely, and I just say this is an area where the foundation has done some research. We fully recognize it's a significant challenge for those particularly under 18 and young people in general. I'm going to call out my colleague Ruth, who's over in the corner.
We also have a mic here.
Oh, who, to just say, I'm going to ask you to go chase her down because she is the guru on youth financial services and can provide lots of insight, but generally greater competition and more of digital channels. Anne-Marie.
I think this room is the elite of the financial sectors of various countries. And so maybe the level of customer centricity is considerably higher than a lot of organizations that are not here, and particularly very small ones. In the past, probably the SACCOs were the most in touch with the real customers, particularly in the rural areas. And I think with the new movement of using human-centered design and various very sophisticated approaches, only the quite large organizations can afford to invest in the skills necessary. For much smaller organizations, it's not possible to get that type of skill in-house, and the business case is already impossible for actually starting on the process. And even here, I think a lot of the human-centered design processes have been subsidized, and the subsidies are going mostly to the better proposals, the more attractive organizations that have far larger clients. So I think there's a sort of inequality arising where the smaller organizations are more and more left behind and cannot access this.
Very good. We're in a bit of a bubble, is what you're saying, or we need to expand who we invite and move things forward to a wider audience, perhaps including some of the banks that you were mentioning as well. I realized that we left a few people who were standing up over on this side.
We also have Ruth back there.
And Ruth, I don't know if you want to just circle back a little bit on youth financial services.
One of the biggest takeaways from the Foundation's work in youth financial services is that it's a difficult sell because the business case and break-even proposition is long-term. And it requires a different type of thinking for a commercial provider who tends to have extremely short-term sights around profitability, particularly because markets are not saturated in much of Africa. Temptation for the commercial provider is to go after the short-term gains. So it requires long-term thinking. It requires a very different strategy and approach from the provider.
All right, so we're going to look at the ecosystem on these next two questions. The first question we asked, which of the enabling environment features below are most necessary to achieve greater client centricity? Obviously, you can't see all the choices that were on the survey, but the top 3 responses were these. 70% of you said technology and innovation, 53% partnerships, and 42% of you said consumer protection measures. Now this is, linking these things to the ecosystem is interesting, and I was fortunate to spend some time with Musoni a couple weeks ago, and the CEO, Stanley, kept telling me that technology is the most important thing for them to scale, but also to be client-centric, and partnerships is number 2. And so I can see how that is a big part of the ecosystem. How do you invest in technology when there isn't a mobile network in place, for instance? How do you build partnerships? And how can we help organizations figure out how to do that better? So that really resonates with what we've seen in the field as well.
Absolutely. And we also asked you, to what extent do you believe that the financial services ecosystem in your key markets of work is client-centric? And here, we were pretty much 50-50 split, so there was no kind of almost middle ground. It was, half of you think that we're getting there, and then half of you think we have a long way to go. I'd be curious to hear from those who think we have a long way to go. Is there a particular area? Is it a regulatory issue? Does it have to do with the client protection measures that we mentioned before? Or is there something else that we need to do, or we all need to think about when we engage with others in the ecosystem?
I just wanted to make a comment about how I don't think we're there yet because there's not enough competition. A lot of the times we're focused on amazing innovations that are happening, but they're typically happening in very few countries in Africa. By the way, I'm Leslie Denius from IFC, and IFC takes a particular approach trying to focus on fragile and conflict-afflicted countries, and particularly in West Africa, French-speaking countries. And a lot of these countries end up very sort of underserved, I think, by our community. And in these ecosystems where we're trying to work, I think that we have a long way to go. We need a lot more providers. We need a lot more, specialists in the sector. We need a lot more development on human resources. We need better regulation. And when all of these things happen, we'll see services flourish. And I think that when we have competition in these markets, we'll be able to then focus more on customer centricity. There'll be motivation to get there, but there's still a long way to go.
Thank you. So in some markets, more customers, more competition.
Hi, I'm Sabrina Lamb from World of Money. Our organization focuses on financial education for children ages 7 to 18. Even though we have provided 120 hours of classroom financial education, the only way that we could reach additional children, not only in America, but particularly here on the continent, was to provide a mobile app. So we have partners now in Ghana, Senegal, Rwanda, and South Africa. And one earlier point that I had regarding the earlier question was, we were focused only on classroom education. And one of our students, his name is Mikael, who has been diagnosed as slightly autistic, he never would perform well when we would teach in the standard classroom model. But when we integrated technology, he was the top 4th person on the 77-question final exam. So we had to change in terms of not what we thought was correct, but how our students could properly learn. And in terms of the challenges with our mobile app and so forth that we're distributed all over the globe, is for countries and communities that do not have access to data. Some do and some don't. It's my determination and vision to somehow so that it's an equal playing field that all children will have access to data.
So access to data is critical. There's another hand over there.
Hand back here.
Thank you. And listening to clients and understanding what they need.
I'm Herman Messon. I work with UNCDF, the micro-lead program. Just wanted to share that the reason why, as Leslie pointed, we do not necessarily have the client centricity attitude or behavior for all the stakeholders of the ecosystem is precisely because they don't see that there is a business case for that. I mean, partly lack of competition, but if they are able to understand that, okay, like moving toward customer-centric practices, will improve our bottom line, that will happen. We've had some good experience in Burkina Faso with our partner SoFI2017 and with Grameen Foundation. We're trying to build an integration between the savings accounts and the mobile wallets. Was damn difficult. You know, we've done the same thing here, I mean, with Fidelity Bank, with other partners in Ghana, because the market is more competitive. But in Burkina, where you have like one MNO having 80% of the market, it kind of was very, very difficult. And of recent, through dialogue, through discussion, not only was the financial institution now completely convinced about the model that we tested, but also we've seen government also coming in and trying to enforce, you know, regulation, not from the central bank perspective, because that's a whole lot of different game in UEMOA countries, in YMO countries, but from the telco regulation, which is more nationally owned, so that they can open up even the USSD and ensure that the interoperability, I mean, the integration between wallet and other value-added services can be done. So I think we really need to continue supporting and also make sure that the innovation are tested, that the business case are proven, you know, through or for every player of the value chain, and then I think there will be more and more openness toward technology and partnership. Yeah, thank you.
Thanks.
That's great, thank you. Any other comments on the ecosystem or on regulation?
Thank you. Hi, Isabel Barris from the Smart Campaign at CFI. I just want to maybe play a little bit devil's advocate and say we've been talking about the business case as very important, and of course, if we want this to be sustainable, there needs to be a business case, but I think we're making the assumption that in every case there is a business case, and that we need to do a better job at maybe sharing the positive experiences. But I'd like to just also have us think about what about the cases where there isn't a business case? And if we really care about consumer, the customer experience, and we are, I think all of this crowd is definitely sold on the importance of that, then how do we still focus on the consumers in those cases, and what can we do? And maybe it goes back to the patient capital that was mentioned also before, but how can we bridge the gap until we get there, until there is a business case?
That's a very good point, particularly since customer protection is such an important component of this.
Hi, I'm Bennett Grisano with Kiva. I'd like to follow up on that point just quickly. So, you know, at Kiva, we work with over 400 financial service providers in 80 plus countries, and we're constantly negotiating with them when they renew their credit line with Kiva to try something new and innovative. And what we find is that there are some folks who very much get the social mission and will jump right on board. Many of them come at it from the perspective of improving the welfare of their clients. Many others see it as a growth opportunity. But I think, you know, in Silicon Valley, you know, Kiva's in San Francisco, there's the mantra innovate or die. And in a lot of the markets where we work, you can not innovate and do just fine. Yeah. And I think it'll really, it'll come down to when they're actually feeling market pressure, that they're actually losing clients, is the thing that I think in a lot of cases where the business case isn't obviously there, that's probably what it's going to take. And other than that, it's really going to be, you know, focusing on those organizations that have put the social mission first.
So building on Leslie's point, competition, but also embedding in consumer protection.
Hello, my name is Emilio Hernandez. I'm from CGAP. I work at the Smallholder Finance Innovation Initiative within CGAP. And I just wanted to comment that this comment about getting the ecosystem right is very at the heart of responding to client needs. In our research work, we find how smallholder livelihoods, which is a segment that pops up more and more in the financial inclusion agenda, these livelihoods are very diverse and they have many needs, you know, that are related to agriculture and non-agriculture. And I think the discussions that we've been having with providers, especially the keynote speaker today, help you realize how it takes the business case for it depends for the provider on the business model you use. Yeah. So sometimes we see our partners confronted with this challenge and saying, well, you know, I don't see a business case but that is really subject to the business model that you're using. If you change your business model, there might be a business case, right? And these partnerships among different commercial actors are key in coming to that business model that is feasible, that allows you to provide services in a sustainable manner to this mass market. So being able to respond to client needs with non-financial services, non-agricultural financial services, as well as general financial services is probably key to coming up with the challenge of customer being able to value and willing to uptake your product.
Understanding customers and the importance of the business model. Very good points. There's a hand right there. Thank you, Emilio.
I'm Warenga Kibe. I work with Access to Finance Rwanda. I just want to give a simple thing that I saw in one of our projects where we are partnering with 2 MFIs. The moment we moved the discussion from the management and senior management, we wanted to partner on how can we increase agricultural lending within the MFI, and moved it to the board level and said, unless this project is approved at the board, discussed at the board, we won't move forward. And when that discussion moved there was greater commitment to do product research, to provide resources for the units you are trying to set up. So I think moving the discussion and approval of partnership to board level around being client-centric, it makes a difference.
It's a great point. Institutional buy-in at all levels.
My name is Shandofa DeBright, and I work with Farmerline. We're using technology to promote financial services for smallholder farmers and also providing them information. I think one key thing that what we saw when we did a pilot with an app we call PayTime was enforcement issue. The mobile money has some kind of transactional charges, which is really well known in the cities. But in the rural communities, I mean, the agents do not follow these kind of policies, and they charge higher than what is charged in the cities. And so working with these farmers in those communities make the cost very high, and you don't want to do that. Again, for the past, I think, 2 years, Ghana, there have been some kind of financial institutions that they've duped the rural people. And so when you go there and talk about savings and talk about opening an account, they think it's the same thing, it's going to be the same circle. And so farmers have that kind of doubt. They don't want to even try. And I think that if government and other institutions trying to enforce these kind of policies, then we are able to eliminate this kind of doubt that would prevent people from trying to open an account with other good providers. Thank you.
Thank you. Client trust.
Yeah, thank you. My name is Stanley from Musoni, and we are one of the organizations that have been able to digitize customer onboarding, and this has contributed heavily towards improving our customer centricity. One of the things that we've been able to achieve, one is the minimal cost of client onboarding, and removing the barriers of getting customers into Musoni, and therefore improving our reach deep in the rural areas. The benefits that we've been able to achieve besides that are the multiple communication channels that we've opened with our customers. So that way, we've been able to institutionalize the customer and make it more than just a relationship. So a customer knows that I do not need to talk to loan officer X to get my issue sorted out. And I have a choice to make of the product that I need from a Musoni product suite, not what is being forced to me that doesn't make, that doesn't suit my needs. So from an institutional point of view, I would say, for us, we've been able to see increased customer centricity through use of digital platforms significantly, and I know that will be a subject of discussion at a later time. Thank you very much.
Wonderful, thank you. Digitization, reducing the cost of customer acquisition. There's one more hand over here, and then I think we're getting close to lunch. We'll do a quick wrap up.
My name is Kwame, and I work with Opportunity International here in Ghana. One of the issues that we also need to be aware of is the regulator's point of view. For us as financial service providers, you are strictly regulated by the central banks in various countries as it is, and what appetite do they have for technology? Because these are standards, practices that have been there for ages, and you have new trends coming in. To what extent would the central bank agree that a digital address can be used? And even if whether that exists. So you have issues or bottlenecks from that perspective in helping a financial institution really deepen outreach. You have clients in locations where they don't even have an address. They live in the street virtually, but there are clients that you can serve to increase access to financial services. But you can't capture their data into your core banking system because it will not be accepted by the regulator. We found on KYC and regulatory issues. So that aspect also prevents us as financial service providers to really increase the access that we really want to do. So our ability of or the ability of regulators or industry players to accept the new trends and whether they are there with us as financial service providers is key. Thank you.
Thank you. And I think that's a very good point to end on. We're actually going to talk a bit more on the ecosystem this afternoon. Certainly we need to bring regulators into the room, and we also need to make sure that we're speaking to, not just speaking to the friends and family that are here, but to a wider variety of organizations. A few key themes: really understanding customers, understanding their needs from their perspective, thinking about delight, thinking about empathy, integrating the need for customer centricity throughout the organization, from the board all the way down to the frontline staff. The business case. We do have more to do. Stay tuned. Visit our website. There'll be more reports coming out. The Learning Lab's putting out some reports specifically related to the business case for serving smallholder farmers. But we know there's a lot more to do, and it will be a continuing journey and a continuing pathway. Is there anything that I missed in the summation?
No, but I do think that, just going back to what Stanley was saying, is that technology is really key in reaching out and touching customers, and I think digital is a key way to improve customer centricity, but also partnerships. How do you deliver more than just the loans, other values along the lending value chain? So I think digital and partnerships are key.
Great. Thank you.